Yeah.
Okay. Read the question, please.
The financial year of Sandton Limited ends on 30 September. During the year ended 30 September
Okay, stop.
2016, the
It is ending
following
on which date?
30 September
That means
2016.
they will ask us to prepare everything on which date?
30 September 2016.
Okay, very well. Now read ahead.
The following transactions took place. First, the company made a profit for the year of 14,750.
Stop.
Second, and
Profit for the
yeah,
year. Profit for the year. You are supposed to prepare two things. They've asked you to prepare two things, right?
yeah,
They've asked you to prepare the statement of changes in equity and the statement of financial position.
yes.
Profit for the year will come at two places. What are the two places where your profit for the year will come?
Income statement and statement of changes in
Good.
equity.
In statement of changes in equity, where will it come?
Retained earnings.
Retained earnings. So I will go and write it in the retained earnings and I will write it in the total.
Okay.
Okay. This is October, November 2016 question paper, paper 22.
Okay.
Now over here. Come on, read the next part.
An interim dividend of 4,500 was paid on the ordinary share.
Okay, so from where do you pay interim dividend?
So much we write it in the share capital section.
Share capital
No,
section.
no, 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 no. The interim dividend of 4,500 was paid. So retained earnings
You will remove it from retained earnings and you will remove it from total. Your
total.
statement of
Yeah,
changes in equity format should be known properly to you.
yeah,
Okay, if you forget, you will forget everything.
yes, yes.
Go ahead.
A transfer of 5,000 was made to the general reserve. So a minus from the retained earnings and add to the general reserve.
Done.
And
Anything else is there?
retained, so,
Nothing
no
else
mess.
is there. So you just
Now we
do
just
totals. You will just do the totals of all the columns. Can you give me the total of the retained earnings?
yeah, miss. 36250.
And of the shareholders' funds, the total.
Yeah, 205,250.
Done. Okay.
Yeah, miss. Okay.
Now they want you to prepare the statement of financial position, and for that,
Yeah,
some information has been given to you. So, this is the information before you go to anywhere. What will you do is you will do your markings. Okay.
yeah.
So, 3%
Dependent,
debentures.
non-current liability,
Yeah.
non-current liability,
Premises,
a non-current asset,
fixtures and fittings at valuation, at cost.
NCA,
Hmm.
NCA,
Motor vehicles,
NCA,
provision for depreciation,
provision, we do
all the
assets,
provisions NCA second column.
yeah, NCA,
Trade receivables,
current assets,
trade payables,
current liability,
other receivables,
current assets,
other payables,
current liability,
bank,
current assets for bank,
entry.
current assets,
But if you see bank, they have
NCA
given
second,
you 4295
yeah,
credit.
credit,
So if it's credit, that
Yes.
means it is a current liability.
Okay.
And provision for doubtful debts,
NTA second column.
provision for doubtful debts, you will deduct it from trade receivables.
Okay.
Okay.
Yeah.
Now they've asked you to prepare the statement of financial position. Can you
Mm-hmm.
see that?
Yes.
Now, since they've asked you to prepare the statement of financial position, what will we do? We will
First
start with
write the first
columns.
NTA from the.
Okay. Start. First, we write
Yeah.
non-current assets.
Yeah.
Three columns are there. What are the three columns?
Yes, I don't remember. One
Cost,
is net book value.
accumulated depreciation, and net book value. This is
Net
also
book.
called provision for depreciation.
Okay.
How many non-current
What's
assets?
the second column?
Sorry,
What's the second one? Accumulated. One.
depreciation.
Okay.
How many non-current assets do you have?
We have fixtures and equipment, motor vehicles, and provision for the.
Premises, fixtures, and motor vehicles. Three.
Yeah.
Okay, so I'm writing that. Premises I have fixtures and equipment and motor vehicles.
Yeah.
Okay, premises, what is the cost that is given to us?
135,200.
So I'll write that.
Yeah.
Fixtures, what is the cost that is given?
37,600.
Motor vehicle.
54,000.
Then, if you see, you
Yeah.
have provision for depreciation only for two assets.
Yeah. So
So
we
that
subtract
means
them.
premises has no depreciation.
Yeah.
The cost and the net book value would remain the same.
Yeah.
Fixtures and fittings,
Uh, 120.
7520. And for motor vehicles, I have 10,800. Yes.
Yes.
Cost minus provision for depreciation, I will get the net book value.
It's 30,080 for fixtures and equipment.
And for motor vehicles,
43,200.
then I will make a through line for all the three and a
Yeah.
two liner for here. Give me the total of all this cost.
Uh, 226800.
All the accumulated depreciation. It's 18
18,320.
from 226,800. When you will deduct 18,320, what will you get?
208480.
Okay. Now after this, what will you write? Non-current assets,
Current assets.
current assets.
Yeah.
What are your current assets? First, I can see trade receivables. I've completed this part.
Yeah. 10,800. 10,840.
You also have provision for depreciation, right?
Yeah.
So from
So
the
we
trade
subtract.
receivables, you will subtract the provision for doubtful debts. Sorry.
Yeah. 271. So it's 10,569.
After that,
After that, we do other receivables.
hmm, how much is other receivables?
472.
After that,
We do inventory 12613.
no other current assets due to total
Yeah.
put outside. So it is 23,654.
Uh, yeah.
Non-current assets plus current assets.
Yeah.
What will it give you? Your total assets.
22134. Yeah.
232134.
Yes.
Hmm? Now what will
Yeah.
you start with?
Non-current liability.
No. First you will have your equity,
Oh, equity. Yeah.
in
And reserve.
your balance sheet. Your liability side starts with equity and
Reserve.
liabilities.
Yeah. So capital is
After you
one
have
lakh 50,000.
equity and liabilities, you underline it twice, and below that you will write equity and reserves.
Yeah. Equity is 150,000.
After writing this, you will write 1 plus 2 plus 3. Share
Yes.
capital,
Yeah. And then general reserve and
reserves,
retained earnings.
and retained earnings.
Yeah.
Share capital is
150,000.
general reserves is
Uh, 14,000.
19. The last column you will
Okay. Yeah.
take. Retained
I thought it
earnings
was
is 36.
36250.
Yeah, so the total is 205, 250, which you've already calculated.
Yeah.
Okay. Then you have your
Hmm.
non-current liability.
Yeah. In non-current liability, we have nothing.
We have C.
There is no. Oh yeah, yeah, debenture.
You have to read the question properly.
And miss, they are saying 3% debentures. What does that mean?
That means the debentures are payable interest at 3%. Whether informed or not, you have to incorporate it in the income statement.
Okay.
We are not preparing income statement. So this is repayable in 2020. So your debentures is 15,000.
Yeah. And now
After
current
the
liability.
current liabilities.
We have trade payables,
Hmm.
other payables,
How
and
much
bank.
is trade payables?
It is 740.
60. Other payables is
Other payables is 130.
on bank overdraft.
4294.
So what is your total current liabilities?
11,884.
So what is your total?
Yeah. 26,884.
What nonsense. Your equity and
Yes.
reserves plus your
Oh,
non-current
okay.
liability plus your current liability.
Yeah, yeah,
Total assets must be equal to your total liabilities at all the time.
yeah.
So your total liabilities is how much?
232184.
Yes, so your total assets must always be equal to your total liabilities.
Yes.
Done?
Yeah.
So this is very clear.